This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on May 22nd, 2015. Our time is 8:48 Mountain. Last weekend in Canada, it was Victoria Long Weekend. In the United States, even though we're based out of Canada, our radio show is a Canadian show. We have a lot of people in the United States who listen to us via our podcast and Harold's websites, and we say Happy Memorial Day to those that listen to our radio show down in the United States. Now, if you ever miss a radio show, the shows are archived and streaming live on Harold's two websites, HESradio.com and rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You'll find us there. We're portable. We go anywhere you do. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Telephone number 1-800-432-1022 to speak personally and privately with Harold about investing in hard assets. Our featured diamond of the week is a .53 carat, and this is one of the most spectacular colored diamonds I think we've ever featured. Last week we had the heart-shaped, and it was a pink. It was a beauty. But the color on this diamond is just stunning. .53 carat, princess cut, fancy, intense, yellow-green. Take a look at it at Featured Diamond of the Week, rarecoloreddiamonds.com. If you're interested in adding it to your portfolio or starting a diamond portfolio today, speak with Harold, 1-800-432-1022. Congratulations to rarecoloreddiamonds.com and Harold Siegel, also Diamante Atelier. They actually had an investor. His name is Mr. Peter Sang of Long Island, New York. And he made an investment in a 1.55 fancy deep green diamond ring and a .66 marquee fancy intense orange diamond. And it was sold by rarecoloreddiamonds.com and Diamante Atelier. The 1.55 fancy deep green modified rectangular diamond was set in a ring and surrounded by pink diamonds and white diamonds woven in a beautiful scallop style with white diamonds running down the shank. The .66 marquee brilliant cut fancy intense orange diamond is a rare beauty of a stone, and Diamante Atelier and rarecoloreddiamonds.com happy to announce the sale to Mr. Peter Sang of Long Island, New York for a record-breaking undisclosed price. We will talk more about that later in the show, but you're getting an idea of why people are moving into hard assets. In fact, this week, some of the news coming out really points people in that direction. HSBC to charge for some European currency accounts due to negative interest rates. Ireland and Portugal sell debt this week with negative yields. You're paying them. Greece, the bailout talks continue. Now they're talking this morning about some crazy parallel currencies. UK inflation falls below zero for the first time since 1960. And in the United States, they're spending $100 billion on food assistance. Last year, 110 million people took part in food assistance programs in the United States, some overlapping. But Harold, we have a beautiful featured diamond this week, and congratulations on the sale to Mr. Peter Sang of Long Island, New York, of those stunning diamonds, and they are absolutely amazing.
Well, thank you very much, Randy. Yes, it was he was very, very fortunate. He's a big collector, but he actually purchased two diamonds that most people in their life will never, ever get to see. One of them is obviously deep green, and you need actually uranium in order for a diamond to turn green. So again, they're extremely rare. This is a large one. It's a 1.55, but the orange, let's face it, very few people in their lifetime will ever see a pure orange intense diamond. So again, it's representative of where investors are starting to put their money into hard assets that are not paper assets. And again, it makes a lot of sense to people that are more conservative. You know, the fact is that a lot of my clients are very conservative, non-speculative. It's not a good idea to speculate in these particular times because, again, there's so much manipulation going on in the market, and so many things happening that are unusual, things that have never happened to us before, that it's really a time to be conservative and to own your assets outright, to own your gold, to own your silver, to own your diamonds, to own your cars, those type of things, because again, the paper markets are very suspect right now, and a lot of the smartest people in the industry are actually predicting that we are going to see another massive sell-off in the stock markets and in the currency markets and in the bond markets. So again, these are very difficult and confusing times. It's a good idea to be conservative, but also to look at alternative assets that you're not going to lose all your money in. And diamonds, certainly colored diamonds, are one of those type of assets. And if you look at the featured diamond this week, most people in their lifetime will never ever get a chance to own a diamond like the one that we're featuring this week. Now, all in all, the markets were lower in gold and silver and commodities this week due to the fact that the U.S. dollar has strengthened again. Now, last week we saw a massive move to the upside in gold and silver because the U.S. dollar fell to around 93 cents. As we're taping the show today on Friday, the market's up 71 points today. On Tuesday, I believe, it was up penny 21, so we're now back up over 96 cents. So there's a direct correlation between the U.S. dollar and gold. When the U.S. dollar strengthens, gold's going to fall off. Now, intermediate and longer term, I'm extremely bullish on gold. I own a lot of gold, and I plan on buying a lot more gold. In actual fact, as you all know, we will be bringing to you physical gold. We heard from the U.S. government, and we should be getting our importer's license almost any day now. But we do anticipate that the price of the U.S. dollar will continue to strengthen, will attempt to break through par again, like it's tried to do twice, and that's when it couldn't do it, we saw the market fall back. But the next time, if the U.S. dollar does break through the par level, which is about another 4 cents from where it is right now, we anticipate that the U.S. dollar will trade in the 103 to 105 level. According to my calculations, that'll push gold down to around $1,100 to $1,000. And at that point, we would want to be a massive buyer of physical gold. Now, the fact is there's no guarantee that this is going to happen. However, I do believe we are going to still see further strength in the U.S. dollar, which should push gold down short term, which will give us a phenomenal buying opportunity. Similar situation with silver. Silver went up to over $18, and now it's back down to $17. It hit $16.85 this morning. We do anticipate if the price of gold does drop to $1,000, that should bring silver in at around $12.50 to $12.75, which would be an amazing buy for physical silver and for physical gold. And we do anticipate that the price of gold and silver will eventually skyrocket again. We were very fortunate to be present for the entire move in gold and silver starting back in 1999 when we were first on CHED Radio and first made our recommendation to sell out of stocks and buy physical gold below $250, and that's exactly where we first started buying it, and silver below $4, we bought it at $3.85. That started the massive increase and move in the price of gold and silver. Most people never believed, especially stock traders, that gold or silver would take off again, but they weren't familiar with the correlation between gold, silver, and the U.S. dollar. And when gold was actually down at $250 and silver was below $4, the U.S. dollar was ridiculously strong, one of the strongest currencies in the world. But as the U.S. dollar started to come down due to certain factors, one was 9/11. And 9/11 changed the face of the stock and commodity markets back at that particular time. So that was the start of it. And we saw gold not only break from 250 to 300, which most people thought would never happen, but once it broke 300, we started to see believers, and gold went from 3 to 350 to 400 to 500, again with some pullbacks along the way, and ultimately went all the way up to $1,900. Now, when it hit $1,900, the actual price was $1,920. It happened in 2011. And in 2011, again, which certainly actually backs up what I'm saying about the correlation between gold and the U.S. dollar. When gold hit its all-time high of 1920, the U.S. dollar hit a tremendous low of 72.5 cents. So there's the correlation. When the gold market rallied, it was because primarily the U.S. dollar was falling substantially. Then all of a sudden, and by the way, silver went from $3.80 when we first started buying it all the way up to $50. Silver should have gotten a lot higher than $50, because back in 1980, when gold hit $8.50, silver hit $50. Those were the highest prices that gold and silver had ever hit, and that was in 1980, and that was due to high inflation. Now, once the move in gold and silver had finished, then you saw gold fall all the way back to $2.50 and silver fall all the way back below the $4 level as the U.S. dollar started to gain strength again. So in 2011, when gold hit its all-time high, silver hit $50, which tied its all-time high, but in all reality, silver should have been trading in and around the $100 level, but it didn't for whatever reason, whether it was suppressed by traders or the banks, because the banks were having a lot of fun trading and ruining the gold and silver market back then. In 2011, the fundamentals for gold were tremendous, and for silver, we thought that gold was going to break 2,000 and ultimately go to 5,000 or higher, and it should have if the banks didn't end up shorting gold and silver and dropping the price down, but more importantly, it was the exchanges where gold and silver is traded that really ruined the gold market at that point and basically sent it into a spiral downwards when they increased the cost of doing business. They made it so expensive to trade gold and silver in the futures market that most speculators couldn't afford it anymore, and that was something that was done purposely by the exchanges where gold and silver is traded and the banks that trade in the gold and silver market. So now we're at a point where the market is almost close to its low. We've seen a 3-year hiatus in the upward movement in gold and silver. We're trading in a range right now. We need to see certain things happen in gold and silver on the upside in order for it to break out again. And I just don't think that that's going to happen for a couple more months. But again, the summertime is a slow time, and we're going to see what happens over the summer. I wouldn't mind in any way, shape, or form to see gold back off and get to the numbers that we want to see it, because we'll be aggressive buyers, and I do believe at that point that there is going to be an event. There is going to be something that happens within the foreseeable near future that is going to send gold and silver prices skyrocketing it again, and I do believe it is going to be something to do with the currency markets. So the currency markets have been crazy lately, obviously. We know what happened in Switzerland when their currency changed by 30% in 1 hour, and consequently so did the euro plummet 30% in 1 hour. We've seen the Canadian dollar in the course of a year drop by 25 or almost 30%, and we've seen other situations. We've seen inflation in Russia, Iran, and in Venezuela reach points to where people can't even afford, to buy a loaf of bread. So and then we've got the situations going on in Europe, mostly with Greece. So we certainly have the situations that can happen that could send these markets skyrocketing it again. The other thing that's happening is that gold and silver are primary in certain commodities. For example, in solar heating, in solar right now, which is a massive thing that's growing by 30% a year, silver is a major component in that. And the fact is that with the price of silver very low, a lot of the mines have shut down. So what we do believe is going to happen in both gold and silver, we are going to see silver and gold get to a point where the supplies are going to be extremely low, the mines are going to be shut down because the prices are low, because they don't want to continue to produce silver and gold at a loss, and then something will happen in the market, a currency move or a war breaking out between Russia and somebody, or Iran, and these markets are going to fly. And they're going to catch the banks that are short, and the market is going to absolutely take off. And let's not forget, the biggest culprit of all in shorting gold and silver, mostly silver, has been J.P. Morgan, one of the biggest banks in the United States. We now find out that J.P. Morgan has not only been shorting the market and dropping it down to ridiculously low levels, but when they were doing that, they were buying physical silver. Supposedly they own about 300 million ounces of physical silver. It's a shocking situation that they've been shorting the market, telling their clients and everything that the market's going lower, and when they do this and accomplish this, they're actually taking delivery of the physical silver. It's an unbelievable thing. By the way, in the newsletter this week, you're also going to see that several banks have been fined, what it was, Randy, 60 some odd billion dollars?
It was $5.8 billion for LIBOR and currency manipulation.
So that's what I'm talking about. When it is disclosed how much these banks have actually done damage to the metals markets and how much money these banks have taken out of the market, fines are going to come from that also. But however, if you look into what that they've done and how much money they made, the fine of almost $6 billion doesn't come close to how much money these banks made. So they're getting a little slap on the wrist, and they make it sound, the SEC will make it sound like it's a really big deal, or the Commodity Futures Trading Commission, but believe me, they made 10 times that amount of money. So again, we're just sitting back biding our time. We're getting ready to buy heavily into physical gold. I think the gold eventually will be $5,000 to $10,000, and we're going to make that kind of return on our money. I believe that the diamond market is going to skyrocket for similar reasons: currency devaluations and just people wanting to own their assets that do not decline like stocks are going to decline. So again, Randy, it's a very difficult, confusing, and dangerous time in the market. Our recommendation is to own your assets, physical gold, physical silver, physical diamonds, and ultimately, when all the dust settles, I believe it's that my clients that will be the healthiest financially and make the most amount of money.
And let's quickly talk about that story Harold mentioned. Wall Street gets slammed with $5.8 billion in fines for rate rigging, and 5 of them have pleaded guilty to criminal charges. Citicorp, J.P. Morgan, Barclays, and RBS, Royal Bank of Scotland, are pleading guilty to charges tied to Forex manipulation. Well, UBS is pleading guilty to interest rate manipulation charges, manipulating the LIBOR. And they have each agreed to a 3-year corporate probation period. One of the things that upset a lot of people is these corporations are anonymous. There are people that are doing these things behind the scenes inside the company. We're not finding out who they are. They are being protected, and there are some folks that are pretty upset about it. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. Speak with him about investing in hard assets, diamonds, gold, and silver. Speak with him personally, 1-800-432-1022, 1-800-432-1022. And talk to him about our featured diamond this week. The color on this diamond, green, is my favorite color. Being a fan of the Edmonton Eskimos, being a fan of the Green Bay Packers, I love the color on this diamond. It's a .53 carat princess cut, fancy, intense yellow green. When the Eskimos and the Packers win their respective championships this year, obviously the Eskimos Grey Cup and Packers the Super Bowl, we need to be talking to Harold about diamond rings for the championship rings, and they should include diamonds like this because they are absolutely stunning. We'll talk more about diamonds in the second half of the show. One of the stories that came out this week that was actually very, very hard-hitting, and it did not surprise me that this is finally being released. Nobel winners' math is showing the S&P 500 is unhinged from reality. If you sold every share of every company in the United States and used the money to buy up all the factories, machines, and inventory, you'd have some cash left over. That, in a nutshell, is the math behind a bear case in equities that says prices have outrun reality. The concept is embodied in a measurement known as the Q ratio, developed by James Tobin, a Nobel Prize-winning economist at Yale University who died in 2002. According to Tobin's Q, equities in the United States are valued about 10% above the cost of replacing their underlying assets higher than any other time other than the internet bubble and, get this, the 1929 peak. Valuation tools are being dusted off around Wall Street as investors assess the staying power of the bull market that is now the second longest in 60 years. To Andrew Smithers, 77-year-old former head of S.G. Warburg's investment arm, the Q ratio is an indicator whose time has come because it illuminates distortions caused by quantitative easing. QE is a very dangerous policy in my view because it has pushed asset prices up, and high asset prices, we know from history, are very, very dangerous, according to Smithers, founder of Smithers & Co. in London. Over the phone he was interviewed. It's a very strong indication by reliable measures that we're looking at a stock market which is something like, okay, sit down for this one, 80% overpriced. We have this story in our newsletter. Get our free weekly newsletter from Harold. You can go through it in 5 minutes on any of your portable devices, or you can spend hours and go through it. Connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. But using the Q ratio, we're looking at a stock market in the United States, the S&P 500, 80% overvalued. And Harold, we have about a minute and a half left in our first segment.
I believe that 100%. We always said that the Dow was so ridiculously overpriced. Last week, the retail sales numbers were horrible, and all the news coming out of the market were horrible, and the market still went up and hit record highs. So, again, we just don't believe in it. I don't have a penny invested in that market, nor would I, because it makes absolutely no sense, and there's no way that the U.S. economy reflects an 18,000-point Dow. It reflects about an 8,000-point Dow, and again, I believe that report to be true.
Speak with Harold about investing in our featured Diamond of the Week. It's a .53 carat Princess Cut Fancy Intense Yellow Green. This is the rarest of the rare museum quality piece that will be snapped up after the show by a smart investor. And when we do have our featured diamonds online on Harold's website, featured Diamond of the Week at rarecoloreddiamonds.com, Harold does receive many calls on Monday, Tuesday, inquiring about investing in those diamonds. So if you're interested, do not wait. Go take a look at the featured Diamond of the Week, .53 carat Princess Cut Fancy Intense Yellow Green, one of the most stunning diamonds you will ever see. And we should remind you that if you'd like to receive our free weekly newsletter, as mentioned, speak with Harold. He'll be happy to get your name on the list. You can be reading the same stories that we are and getting the same info on a weekly basis. It's the companion to our radio show, a must-read every week. Going to come back and talk more in detail about diamonds. It was a great week for diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on May 22nd, 2015. Our time is 9:14 Mountain. Our radio show runs on 6:30 CHED in Edmonton, 3 o'clock in the afternoon on Sundays. And do not forget, our show is portable. We go anywhere you do through a podcast on iTunes. Type in the World Financial Report on Radio. You'll find our podcast. You can subscribe to it. We go anywhere you do on your portable device. We have the shows streaming live, too, on Harold's two websites, HESradio.com and rarecoloreddiamonds.com. In Canada, here, we had our long weekend last weekend, Victoria Day, long weekend. Hopefully everyone had a good long weekend. And in the United States, this coming week, they have Memorial Day and the good old U.S. of A. And I know that we do have some people that listen to our radio show via the podcast and Harold's websites. Harold has clients, diamond clients, all over the world, really all over the world. people have invested with Harold. And we have people listening to the radio show all over the world, and including the United States. So we say happy Memorial Day to those folks. Connect with Harold at rarecoloreddiamonds.com. Speak with him personally and privately at 1-800-432-1022. One of the big stories coming out that we'd like to let you know about. Congratulations to rarecoloreddiamonds.com and Diamante Atelier. They recently had an investor. His name is Mr. Peter Sang of Long Island, New York. And this is for a record-breaking, undisclosed price. Pick up a 1.55 fancy deep green diamond ring and a .66 marquee fancy intense orange diamond, and sold by rarecoloreddiamonds.com and Diamante Atelier. The 1.55 fancy deep green modified rectangular diamond is also set in a ring and surrounded by pink diamonds and white diamonds woven in a beautiful scallop style, with white diamonds running down the shank. Now, the .66 Marquee Brilliant Cut Fancy Intense Orange Diamond is a rare beauty of a stone, a museum piece. And Diamante Atelier and rarecoloreddiamonds.com congratulate Mr. Peter Sang of Long Island, New York, for that investment and record-breaking price, undisclosed price. Harold, our featured diamond of the week, a .53 carat princess cut fancy intense yellow green. It's a museum piece in its own right, something that would be great to start a portfolio with. We're just seeing, even though we're in a time where paper assets are just very uncertain, hard assets, diamonds, gold, and silver, as we mentioned on the last show, watches, art, cars, all doing very well.
They certainly are, and boy, every time I look at this particular diamond, I'm looking at it right now, the half a carat princess cut fancy yellow green. It's the most beautiful color you could ever imagine. And to think that a diamond can actually turn that color, because let's face it, the majority of diamonds that come out of the ground are white. They come out as rough diamonds, obviously uncut and unpolished. But the majority of diamonds that come out of mines all around the world are white diamonds. They come out in rough, then they're sold to cutters and polishers who cut and polish these diamonds and sell them to the jewelry trade. Then you look at the colored diamond market. And only one diamond in 100,000 turns out to be a colored diamond. That's an unbelievable ratio, but it's true. Only one diamond in 100,000 turns out to be colored. What turns a diamond colored? Well, nitrogen will turn a diamond yellow or orange. Very seldom will you see an orange diamond. The diamonds that Randy spoke about that we sold through my company, Diamante Atelier and Rare Colored Diamonds, are one of a kind. You'll never ever see diamonds like that. A fancy deep green? Are you kidding? Diamonds like that don't exist. And most people in this world will never ever see a diamond like that. And then to see an orange diamond, a pure orange diamond with no other modifiers in it, again, is as rare as getting a red diamond. So, Mr. Sang did very, very well, but he was a very shrewd and sharp man that knows, where to put his money. And again, he felt very uncomfortable in paper assets and put some of his money into hard assets, mainly diamonds. Now, if one diamond out of 100,000 is colored, does that mean that all colored diamonds are rare? No, they're not. In fact, most colored diamonds are not investment quality. Most of the diamonds that come out of the Argyle mine are not investment quality. In fact, the Argyle mine produces 30 million carats of diamonds a year, but only 200 carats are these amazing pink diamonds. So the rest of them are white industrial diamonds that are used to cut other diamonds. So just because a diamond is colored does not mean that it's valuable. However, the ones that are extreme. And even a half a carat princess cut fancy, intense yellow green is so rare because it's not yellowish green. It's yellow green, so it's got as much yellow as it does green in it. But when you look at the picture, the video of this particular diamond, it will take your breath away. It's the most beautiful diamond you could ever possibly imagine. The other thing about it that makes it so rare is the cut. It's a princess cut. Princess cuts are extremely rare cuts of diamonds. So this particular diamond, some lucky investor will buy over the weekend or early next next week, but it's a diamond that could never, ever be duplicated. We've not seen another diamond like this one. So, again, it's spectacular. Also, the Argyle mine is going to close in 5 years, less than 5 years, and they produce all of the pink diamonds in the world, basically, 95% of them, and that mine is about to close. The price of pink diamonds are skyrocketing. I cannot believe how high the price of pink diamonds are going, and believe me, it is nothing compared to what's going to happen in the next 5 to 7 years, because you're talking about an entire class of diamonds, an entire class that is so popular, pink diamonds will literally be gone. 95% of them come from the Argyle mine in Western Australia, and Argyle, which is owned by Rio Tinto, has come out several times and said that the mine unfortunately is going to close because it's just not producing anymore and it's not profitable. And what's also happening is these magnificent pink diamonds and purple pinks and orangey pinks that came out of the Argyle mine previous don't come out of the mine hardly anymore. Now you're getting a lot of brownie pinks or pinkish browns, and they're not desirable, not like the pure pinks or the purplish pinks or the orangey pinks. So again, this is a very unusual situation that will never happen again. There is no other mine in existence that produces 95% of any particular diamond. So again, for those that are investing in Argyle pinks, and we still have, we put most of our money back into the Argyle pink diamond market. So whenever we can get these amazing pink diamonds, those are the diamonds that our clients are investing in heaviest. And to own a pink, a vivid pink, or an intense pink diamond today that's from the Argyle mine, especially it's over a half a carat, is number one, nearly impossible to get and are skyrocketing in price. These are the best investments you could possibly make. And again, over the next 5 to 7 years, you will see returns on these diamonds like you have never seen on any investment before, and this will never ever happen again. Now, it's not for everybody. It used to be a time that you could get involved in the Argyle pink diamond market for $10,000, $20,000, $30,000. Now the minimum is in the $50,000 to $60,000 range, and those are for very small diamonds. 95% of the Argyle pinks are under a quarter carat. They're known as the most concentrated form of wealth on earth. And when you see these diamonds in person, you may think that they're small, but they are so valuable, and again, they maintain the value. They never decline in value. So again, it's very important to watch where you put your money today, to be out of the paper asset market, especially now where the stock markets are way overvalued, and again, things are happening in the currency markets and different paper assets, bonds also, that you just don't want to be part of. And then there's the derivatives market, which is the most dangerous paper market in existence, in the quadrillions of dollars, and it's unregulated. You don't want to be in any of those markets right now. They're way overinflated. You want to have some of your money into hard assets, and I would say physical gold and physical diamonds is by far the best place to have your money. That's where most of the money is going to be made over the next 10 years, and that's where we want to see our clients. So, again, Randy, you're right. The featured diamond is one of the most beautiful we've ever seen, and it is available for sale. The Argyle pink diamonds are amazing assets that could increase as much as 1,000% over the next 10 years. On top of that, yellow flawless diamonds are going up by 15% a year. They're hard to get. They're really beautiful. South African yellow flawless diamonds are nearly impossible to get today. And again, they go up by 15% a year and never decline in price. So go to our website, Rare Color Diamonds. First thing is look at the featured diamond and be prepared, because it'll take your breath away. Then look at our loose diamond section and look at the Argyle pinks. Go to the fancy pinks, the fancy intense, and then the best color of all is fancy vivid. Again, those diamonds are doubling every 2 years now. So these diamonds are amazing. They'll make you a fortune in money. They never decline in value, and soon you will not be able to get them. So now is an excellent time to get out of stocks, out of paper assets, and put some money into an asset that's going to make you some real money, and that's the diamond market.
Well, if the Q ratio is correct, that story we mentioned earlier in the show, and the S&P 500 is 80% overvalued, You want to have an insurance policy in your portfolio of hard assets. Our featured diamond, a .53 carat princess cut fancy intense yellow green. See it in our free weekly newsletter. Online, view the video, rarecolorediamonds.com, featured diamond of the week. And we touched on Harold's company having an investor pick up an investment piece in the past as well, an Argyle pink diamond necklace and ring valued at close to $900,000 was sold by rarecolorediamonds.com and Diamante Atelier. One of the sales that happened during the week, colored diamonds and loose gems brought in $5 million at Heritage Auctions. And some of the pieces that did really, really well, it was a stunning heart-shaped ring by Chopard that was crafted in gold and featured a 5-carat fancy light pink diamond center stone. The stone, it was outlined with a row of diamonds set in gold that formed the heart shape of the ring. The piece sold for $605,000. Another top lot from Chopard, an ultra-feminine fancy-cut pink diamond bracelet weighing 6 carats. That piece sold for $485,000. And according to Jill Burgum, who is the Senior Director of Fine Jewelry at Heritage Auctions, colored diamonds attracting particular attention at this sale. In fact, the auction selection of diamonds, colored diamonds, typically small in size, including fancy yellows, fancy pinks, and more. Perhaps this really does underscore the investment concept of buying diamonds. Colored diamonds are certainly more rare than white, colorless diamonds. And we have another auction coming up we'll keep an eye on. $15 million pink diamond ring to headline Christie's Hong Kong jewel sale. A 9.07 carat fancy intense pink diamond ring mounted by Harry Winston, and an estimate on it, 12 to 15 million, will be the headliner on June the 2nd, and we will keep you up to date when we have the results of that auction. But Harold, you take a look at diamonds and its portable private wealth. Now more than ever, when they're talking about, in some countries, outlawing, banning people from being able to use currencies, you need to have that protection in your pocket or at your home. Have your own personal safe, having your diamonds, your gold and silver. If government doesn't want you to have currency or spend currency, which is being proposed in Denmark in stores, and they want it to all be electronic or digital, to me, I find that very concerning.
So do I, Randy. So do I. But I'll tell you, the whole world is crazy right now. You've got countries going bankrupt in Europe. You know, the United States, nobody believes the numbers coming out of the United States, especially with the jobs and everything along that line. So, you know, it's very difficult to get the right type of information in order to make an intelligent decision. Who do you believe? Because the problem is, when the markets are the way that they are, especially the Dow Jones, and when it starts to run and it's in the news every day and the headlines are saying that the Dow is hitting record highs, it draws in the unsuspecting general public. They're the ones that always get hit. They think that they're missing out on something, and they're missing out on the biggest bull market. But if they weren't involved, you know, from 6,000 or 7,000 type of thing, or 8,000, the fact is the general public normally buys at the wrong time. We want to make certain that that doesn't happen. That's why we put the newsletter out each week, and it gives you the information you need to make, hopefully, an intelligent decision. We've been doing this radio show now for about 15 years. So, again, we show up every week, we do our homework, we broadcast it to you in the manner that we feel, you know, everybody will understand. And we've got a huge following, not only in Canada, where I'm from and Randy's from, and most of our listeners from, but we have clients that get our newsletter and listen to our radio show from all over the world, from China, Australia, all over Europe, and in the United States. So, again, I think we do a very good job. We try to get you the right information because we want more than anything for our clients to, number one, not get trapped and lose their money because we know how hard we all work for it. But again, if we're right, and we have been right many, many times, we want our clients to be the recipients of the returns that these markets can give. All we say is to be conservative right now. Do not leverage gold or silver. Make sure that you own it physically, own your diamonds physically, have most of your assets with you, because you're never ever going to know what's going to happen, especially with the banking system, which is another area that we don't trust in any way, shape, or form.
Interesting statistic I came across this week. We have it in the newsletter. According to the Knight Frank Luxury Investment Index and its annual wealth report, colored diamond demand has increased 167% since 2005 in the Middle East and Asia. It's rather interesting. Back in August of 2005, Harold brought us that very first report. Naturally fancy colored diamonds, the best kept secret. He launched rarecoloreddiamonds.com at that time, and it has been a massive success. In the times that we live in, where you have an HSBC because of negative interest rates in a lot of European countries, they're making depositors pay them. We had the story, and I know it's mind-boggling, but if you had a mortgage in some European countries and it was based on the LIBOR, which was running negative, you weren't paying a mortgage interest rate. You were getting paid by the bank. They were paying some of your principal off because of negative rates. In Ireland and Portugal, also in Switzerland, they have sold debt with a negative yield. In fact, they had at least one bond that was a 10-year bond with a negative yield. You would be paying them for 10 years to warehouse your money. And in this environment, Harold, and even inflation in the UK falling below zero for the first time since 1960, we're seeing this deflationary environment come before us, even in the United States and Canada. You need assets that are going to maintain their value. As we've spoken about before, have investments that governments cannot print. Gold, silver, diamonds. Governments can't print hard assets, whether it be art, watches, cars, diamonds, gold, silver. Have investments that governments cannot print, because that is ultimately, Harold, my belief, going to be your insurance policy and the saving grace somewhere down the line.
You're 100% right. Again, there's times to be leveraged. There's times to be in the stock markets and bond markets, and then there's times to be conservative when you want to own commodities like gold, like diamonds, like antique cars, those type of things, and those times are now. There's no reason to be in the Dow at 18,000 when it doesn't reflect what's happening in the U.S. economy. Retail sales are way down. There's an old saying that says, as goes Walmart, as goes the U.S. economy, because the middle class and below shop at Walmart, and now they're not as much. I mean, they're still one of the largest retailers in the world, obviously, but it's more now that people are going to the dollar store. So as things change, people change the way that they do business. And at this particular point, you've got to look at the masses. You've got to look what the general public is doing, mostly the middle class and below, because they spend all the money, and right now they're not spending money. That's why the retail sales were as bad as they are. There's no way in the world that the Dow at 18,000 reflects the U.S. economy. It should be below 10,000 right now.
Speak with Harold about investing in our featured diamond of the week. It's a .53 carat princess cut fancy intense yellow green. This really is nature's art, a museum piece that you would see in any museum around the world. And this is something that you could put in jewelry. You could wear it. Your wealth, and obviously something you can wear at the same time. Take a look at our featured diamond of the week, rarecoloreddiamonds.com, featured diamond. Speak with Harold about investing in diamonds and gold and silver, 1-800-432-1022, 1-800-432-1022. Richard Russell was quoted this week as saying, "In the background, the wealthiest 1% are paying astounding prices at auction." And we saw this last week where there were 10 pieces of art that sold close to $1 billion for $1 billion in New York City. There was one piece of art, a Picasso piece, that went for $149 million. And Russell saying the 1% are paying astounding prices at auction. Last week, for the first time in history, a daily auction at Christie's brought in over $1 billion. Prices for everything from top New York real estate to Picasso masterpieces are going at record highs. The big money is preparing for record asset prices, suggesting that the purchasing power of currencies is heading south. The battle for the cheapest currency continues, and the big money is preparing for it. And he brings up a very good point. We are in a currency war scenario around the world. No one wants a strong currency. Coming out this week, and it made fairly big news, Bridgewater's Ray Dalio, a well-known hedge fund manager, very successful, said that everyone should have an allocation in their portfolio of gold, saying that those who don't either don't know history or don't know the economics of it. And I would encourage you to get our free weekly newsletter from Herald, 1-800-432-1022, and we have just a very short clip. I think it's about 90 seconds of Ray Dalio saying those exact words. And Herald was touching on Walmart. What's happening with Walmart? Their same-store sales growth in the United States was weaker than expected for its most recent quarter. In an earnings call Tuesday, Walmart CEO Doug McMillon blamed a decline in customers' discretionary spending. Based on recent surveys, we know that many of our U.S. consumers are using their tax refunds and the extra money from lower gas prices to pay down debt or put it into savings. And he says they're also using these funds to pay for everyday expenses like utilities and groceries. And Harold was exactly right. One of the big competitors for Walmart is the dollar store. As crazy as it sounds, you have people already in tough financial straits buying and buying their groceries at a Walmart, and then they go down a further level to the dollar store because it's even cheaper, so they can have a little money to get by on and survive. Harold, we have about 2 minutes left in our show here.
Well, it's exactly true, and the fact is that all the jobs that have been added, the majority of them are part-time jobs. So we know, and we anticipated a long time ago with Obamacare, that this was going to happen because massive corporations don't want to pay those extremely high fees as far as insurance goes. So they put people on part-time so they can avoid that. So the fact is that people are not making anywhere near as much money as they used to. They've got part-time jobs instead of full-time. The full-time jobs are paying nowhere near what they used to. Again, it's a crazy time. And if you listen, to the financial pages or you go on, CNBC in the United States, everyone's jovial. They're happy. The Dow's at 18,200. The bottom line is it does not reflect what's happening here. I can guarantee you, I'm a Canadian living in the United States, and things are not good here. The middle class is almost gone. They've lost most of their money and their jobs, and there's no way that 18,000 is representative of what the economy is doing here. So we anticipate that it's going to correct, and when it does correct, it's going to be substantial. We could see the Dow drop below 10,000.
Well, you look at the chart we have in our newsletter this week. For Caterpillar, this is what they're calling the Second Great Depression, what it looks like. According to the latest CAT retail sales data, Caterpillar has now reported an unprecedented 29 months of declining global retail sales. And that is obviously a very eye-opening sign that all is not well with the world economy. And now is a time for hard assets to protect yourself. Have that insurance policy in your portfolio. Our featured diamond this week from rarecoloreddiamonds.com is a 0.53 carat princess cut fancy intense yellow green. Go to rarecoloreddiamonds.com, see video of the diamond, speak with Harold personally and privately about investing in our diamond at 1-800-432-1022. And Harold, Thank you for another outstanding show and your knowledge.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Yes, and to our American friends, a happy Memorial Day long weekend. We had a good time last weekend here in Canada on Victoria Day. RareColoredDiamonds.com to speak with Harold or speak with him personally and privately. 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.